role we play is to, we're in business to make money, but we're in business to make money and to also, we've found that we're also here to help people get their businesses financed. We get pride out of helping small businesses that lack the capital to stay in business, make profits, and sometimes graduate to a better situation. Well, you know, one would think that on one side, the current economy we would be seeing a lot more business, and we are getting a lot more calls than we normally do. But a lot of the calls, you know, we don't do any work in process type of financing, so a lot of the calls we would send them to somebody that we think can do it, but a lot of those are unfinanceable at this point in time in the economy. We feel that the banks have gotten TALF and TARP and TALF have not lent it to the people that really need it. There are some factors that do BO financing, and some of them have gotten away from that. And the reason is this. Factors borrow off of their receivables, and banks will lend, let's say, up to 80% of what the receivable is back to the factor, so the factor can then lend the client the money. In a PO basis, you're really buying inventory, and you're buying inventory at 100 cents on the dollar, and then you're going to go to a bank, and the bank's going to say, okay, I'm going to lend you 50% of that 100% that you're lending. So you're putting yourself in a hole with your bank loan day one if you're financing that way. The factors have gotten out of this type of financing because the banks will not support it with them. You need somebody like us who, that's what we do. That's all we do. We do not do AR financing. We do strictly PO financing. And we strictly finance the inventory that's to be sold to the creditworthy customer. We could get between 10 and 20 calls a day on new business that we probably turn away 90% of it because there's just not enough. There's not enough funds to go around for us. We employ every dollar we have. And we also, when we need more, we get it. But sometimes it's just so much coming in, you just can't handle it all. Currently, there is a deal from one of my clients from a very large retailer who has fallen, let's say on the credit side, is not a bad credit today, but we don't know what's going to happen when we actually ship the merchandise in September. We don't know if the credit's going to be there. They've been losing money. They have enough cash reserves right now to pay their bills, but we don't know if anybody. And like we said, we base our financing on the creditworthiness of the customer, but not today. It's really the creditworthiness of the customer in 60, 90, 120 days when the merchandise actually ships to the customer. So sometimes it's a guess, and sometimes you got to go with what the current things. This big retailer is having some problems. Now, what we said to the retailer first was, you know, give us a letter of credit, and maybe we can do this deal. We can make the product for you, because then the money would be guaranteed by their bank. The retailer turned us down, saying there was a new vendor, he didn't want to do it. But we might end up going right back to him. I mean, we've gone to the point where we've actually researched puts on this retailer to see if there is a way to use a put in case they do go out of business back in September. But it's very costly and money that has to be laid up in front, and you don't know. And if they don't go, it's really a waste of money. And there is some profit in the deal, but not enough to, you know, the client. Honestly, the client right now is sitting with what could be a $4 million profit if he's using his own money. By the end of the day, he's lucky if he's going to get $300,000 or $400,000 out of the deal.